The third company we're looking at today is British Airways for, I guess, obvious reasons, Brooke.
Yes, so British Airways pilots are going on strike, which has forced the airline to cancel almost 100% of its services today and tomorrow. That's more than 1,600 arrivals and departures. The stock fell as much as 3.1% at one point. Now it's come back a little bit, down a little bit less than 1%. But the estimated cost for British Airways is about £80 million for this two-day strike. The interesting thing is the pilots say to settle this is this much smaller percentage of that, only about £5 million. David.
So what does it say for the aviation companies more broadly around the world right now?
So it's interesting because one of the key points that the pilots are making is that British Airways has actually been doing very well. Their profits are up. They've seen, rising returns on invested capital, and the pilots say, hey, we want a piece of this success. They were willing to take a wage cut during the financial crisis when the airline was struggling to sort of help keep things afloat, and now that British Airways is doing better, they want their wages to go up as well. So it's sort of the price of success in some ways that you're seeing airlines become more disciplined on the cost front, which in turn has led to rising profits, better returns for shareholders, but pilots want some of that.
What's the pushback from the company on that? I mean, that seems fair.
It does seem fair, and I do think the pilots sort of have British Airways in a tough spot right now. I mean, when you look at the demands that they're making relative to the cost of this strike, British Airways is, of course, also suffering in Wall Street just because of the perception of the risk of a no-deal Brexit and the weakening of the pound, weaker demand from UK customers, and so they're not really in a position to continue to worsen their reputation by allowing this labor strike to continue.